Hi, I'm John Gagliano, Senior Director of Biopharm Catalyst.
Hello, I'm Sheff, known as Sheff Station, a 20-year vet in trading biotech stocks.
And this is Biotech Bulls and Breakthroughs. Biopharm Catalyst is not a registered investment advisory firm, and the views on this podcast are not intended to be financial advice. Guests on this podcast may hold the stocks discussed in personal or other investment accounts. This content is for informational purposes only and should not be considered investment advice. Always do your own research before making any investment decisions. If you find the information on this podcast useful and would like more Catalyst information, Biopharm Catalyst is your premier resource for Catalyst data for over 1,000 publicly traded biotech companies. We track clinical trial-based catalysts, everything from IND filings to drug data releases for phase 1, 2, and 3 trials to regulatory decisions. Our Catalyst calendars are updated as soon as the press release comes out, so you can be sure you have the most timely and accurate information to inform your biotech trading. All of our plans come with a 7-day free trial, and we frequently run discounts on our platform. So check out www.biopharmcatalyst.com to get started today. After we were recording, I forgot to mention what date the podcast was for. This is September 18th, 2025, Biotech Bulls and Breakthroughs. Good morning, good afternoon, good evening, depending on where you're listening in from. Welcome back to another episode of Biotech Bulls and Breakthroughs. I'm John Gagliano, Senior Director of Biopharm Catalyst, and we're excited to be joined by the one and only Sheff once again to talk about what's going on in the biotech markets and his catalysts and his watch list. So welcome back, Sheff. As usual, always a pleasure to have you on.
Absolutely, thank you. It's always a pleasure to be here. Always so much to talk about. I mean, as time goes, we just continue to see the market, hitting new highs and doing different things.
Well, it's interesting, obviously XBI trading right around 93, I think it is, if I'm not mistaken, somewhere around there. And, if you take a look back to like some of the lows that we saw in the upper 60s to 70s, I mean, we've kind of come a long way, maybe not quite where we were in 2021, where, we were kind of at like 160 or whatever it was. But, how are you feeling about where we're at right now?
Well, and just what you said, I mean, the XBI actually closed almost at 97 today. So it was up 3, and IBB is up to 144. I just feel that there's just a lot of there's a lot of solid money coming into the market, and they're seeing opportunities not just with the large cap but also with the mid and the small cap, and they're seeing that cash is being put to use. We have different meetings that are coming up that we're going to discuss on this call, where there's several catalysts that just line up for individual investors. And I think they're seeing and reaping the rewards from that, especially over this year. We've seen a pattern of, money coming into these small cap plays and individual investors doing very well.
Yeah, absolutely. Absolutely. I couldn't agree more. And it's good to see. It's really good to see, especially since, like I said, we kind of came from, a period that was a little bit more, I want to say volatile. I mean, biotech is always volatile, but definitely some lower enthusiasm, let's say, like in the last couple of years. And I think we're starting to see a lot of that rebound, and it's really good to see. Just a couple things just in the news and general kind of market questions for you. One thing that's come up a lot in a lot of the things that I've been reading is just rare diseases. And I don't know to what degree, you track companies that are targeting rare diseases. And I guess I just wanted to get your thoughts on that, because the current FDA seems to be rejecting some of these approvals, some of these drugs on a more frequent basis than maybe prior FDA. And I think that, I'm just curious, what your thoughts are, what it means for these companies and investors focused in that area, if you have any thoughts on that.
No, definitely. It's interesting because I see the rare disease space continuing to evolve and grow, just because with the new FDA in, Macquarie has taken another step. And so while initially there were a few companies that didn't get approval for these rare disease drugs because they were looking at single studies as opposed to multiple studies, and they were also looking at different endpoints. It's pretty clear now, especially in the past month since they opened up the complete response letters over the past 5 years, which investors had never been privy to. So you can
Mm-hmm.
go back on the FDA website and look at what the complete response letters were and why companies specifically didn't get their drug approved. And so I think because of that transparency, you see a lot of investors saying, hey, you know what? This is a space, this rare disease space, where if the companies do what they're supposed to do and the drugs do get approved, they can, they can charge an extreme amount for the product, and
Mm-hmm.
hospitals will cover it because there's just no other options. It's in such a rare disease space. And so it's been interesting because they also have this new, you've got the rare diseases that are challenged due to these really small patient populations, complex disease
Yep.
mechanisms. And despite this, the FDA is actively implementing different initiatives, like the initiative that is really good for investors to see is this rare disease innovation hub, where they can
Yeah.
see rare diseases that are being tracked by small and mid-sized companies. The orphan drug designation incentives plan. So, if companies, are working toward getting orphan drug, if they're small, they oftentimes get a voucher from the FDA. And then they're using different initiatives just to support and expedite the development of these effective treatments. Like recent approvals include treatments for conditions like WHIM syndrome and Niemann-Pick disease type C syndrome, and focusing on new approaches that focus on gene therapies and precision medicine to address um, unmet needs. So, it's interesting because on one end, we did start to see that companies, there really wasn't a clear track in how to get approved. And so, once Macri came on, I think initially there were some companies that didn't get approved, but clearly there's an unmet need, and so they're saying, "Hey, these will get approved. This is what you need to do," and
Mm-hmm.
investors are able to see that, and I think that's
Yep.
that's great. So I think and the other thing too that we're seeing is a clear picture in terms of CMC, manufacturing and distribution, because a lot of times these rare orphan drug companies, they need specialized manufacturing process, unique storage and distribution requirements. That add complexity and cost to a lot of these small companies. So that's where the FDA offering incentives allows them to want to be motivated to continue on with the process. And so I think it's going to be good in the long term. I think in the short term there was some stumbling, there were some
Yeah.
blocks because the old way of doing things was just not productive and efficient. I thought more companies were running into issues than we will see moving forward.
Yeah, I think that's a great point. Definitely a great point, and that's certainly optimistic and very good to hear on your end on that. And I think if I'm not mistaken, we have one big priority review coming up on the 26th, if I'm not mistaken, from Stealth. I think it is for Barth syndrome, if I'm not
Yes.
mistaken,
Yep.
which is going to be pretty crucial. And we'll see how that plays out. So, um,
Absolutely. And the opportunity too, like you talked about, to work closely with the FDA so there are no missteps, because it's really costly when a small company does everything that they're supposed to do, and then they think they're at the finish line, they're about to cross, and they're told that they need to go back to the starting point. Companies don't have that cash, and patients end up suffering when drugs that are needed most don't come to the forefront. And so being that they have that additional communication with the FDA really allows them to see that that their work gets through to the finish line.
yeah, absolutely. Um, No, that's great, and thank you for your commentary on that. I just kind of switching gears a little bit. One thing that we have discussed in the past, and something that I know that you've been fairly close to, and are very familiar with, is the Keytruda patent expiration, which is set to expire in the U.S., I believe, and I think internationally on August 8th, 2026. So it's still a little bit away, but it's really it's less than a year away at this point. What does that really mean for, let's say, Merck, right, as a company? Obviously, that's more big pharma, but what more importantly, what does it mean for other companies looking to enter this space? Like, how do you think that is going to shift the market, right? How do you think companies are preparing for that patent expiration, just because of how large of a drug it is that we're talking about?
Absolutely. And with Merck having, between 24 and 26 indications within the oncology space, the loss of exclusivity is going to lead to, what we're seeing now in this space, which is a lot of biosimilar drugs entering, different areas, where they're going to be able to come in and grab market share. So biosimilars of biologics, they typically capture 30 to 40% of the market within 12 months. And then with a company like Merck and Keytruda, you're gonna see them adjusting their price to be competitive with those biosimilars. And so I think I done some estimates, and I was thinking about this as well. I mean, Merck projects a sales decline of around $33 billion in 2028, to about 27 billion in 2029. So roughly a 19% drop,
Yeah,
with
that's huge.
possible, which is massive because
Yeah.
that's their flagship product. So for a company like Merck, with that being their flagship, it's really important with big pharma that they're looking at smaller companies,
Hmm.
to kind of fill in the gap, because that's just a gap that cannot be replaced overnight.
Right.
And
Yeah.
obviously that's I think there's going to be a lot of paralysis within the Merck infrastructure from that. And other forecasts even talk about 15 billion within 5 years post expiry. So it's really going to hit them, and it's going to hit them harder than it would hit any other big pharma, particularly within that space, because there are a lot of biosimilars that are working in the oncology area, ready to come in and swoop off of Keytruda's patent expiration.
Yep, absolutely. No, and it's really interesting. To your point, it's almost going to have to be to some degree like piecemealed from very to your point, like maybe some smaller acquisitions or targets or whatever it is in order to kind of fill that gap. Partnerships, licensing agreements with some of the smaller biotechs to be able to fill that gap. Because yeah, they're not gonna necessarily have a direct replacement for that, obviously, and so they need to figure out how to make up that roughly 20% in some way, as you mentioned.
No, definitely. And the other thing is, so exactly what is a company like Merck doing? I mean, right now they know that is coming. So
Yep.
they're launching a subcutaneous under the skin formulation of Keytruda that they plan to implement by the end of 2025. So what that's going to do is it's expected to preserve market share because biosimilars will be intravenous only initially.
Yep.
So if you have a
Yep.
subcutaneous, they can hold on to some of that piece of the pie. The other thing that Keytruda is looking to do is expand new indications through clinical trials to prolong their commercial relevance. That's the second thing. The third thing, developing and acquiring new immuno-oncology assets to diversify their revenues, including, they just had a recent acquisition of Prometheus Biosciences, for 11 billion, and then they bought Harpoon Therapeutics for 680 million. So they're hoping that those products within those two company pipelines, because they have a lot of cash, are able to supplement, some of that loss. The other final two things, employing lifecycle management tactics like authorized biosimilar launches, and contracting strategies to slow this biosimilar erosion. And then the final thing is, just expecting sharp revenue declines post 2028, but they're preparing their pipeline to compensate that over time
Hmm.
by continually buying companies that have similar areas of strength that they're in right now, like Harpoon and
Yeah.
Prometheus with oncology and other unmet needs that they're in right now.
Absolutely. Um, yeah, it'll be interesting to see kind of how that plays out over the course of the next year, and certainly something that everyone has been keeping an eye on. To your point, this is one of those cases where it's like it's a known. It's not like something that came in and all of a sudden it's like blew up in everybody's faces and all, and
Right.
you're trying to put out a fire, right? This is a very known outcome here, right? And so in that respect, it's able to be, for some of the other companies, they're able to take advantage of it, but for Merck, they're also able to have time to manage for it. It's obviously not something that is blindsiding them, so to speak. So
Yeah, and I also think that other companies are going to take that approach where they say, "Hey, if you're a biosimilar and you come in, you can only initially have an intravenous product. So being able to they're doing subcutaneous, that's a
yep,
brilliant way to keep that market share strong and to have a
absolutely.
different delivery system. Because who wants to have a medication intravenously when you could, um, just put it under your tongue or
Right,
I
exactly,
mean, yeah,
exactly. Um, no, that's
or under the
definitely
skin. Yeah.
definitely interesting. So we'll be keeping an eye on that for sure. Kind of staying along the same lines of oncology. Obviously, we've got ESMO coming up, and you may touch on this a little bit during the catalyst portion of the podcast. But anything in particular you've got your eye on for ESMO at this point?
Yeah, there's a company called Nucana, which has a ton of cash. They recently did a reverse split, and they've got an abstract coming up for their drug NUC 7738, which is going to be used in combination with PD-1 inhibition and renal cell carcinoma. So it's going to be used with Keytruda, and so if that shows, some, which I believe it's going to, if that shows, a lot of activity, that's going to really put New Can on the map. And it could, they could end up potentially being a buyout target. Right now it's $4 a share. Their ticker symbol's NCNA. But that poster presentation on Sunday, October 19th, is going to be really, really big for them. The other one was Briacell, ticker symbol BCTX. They've got a phase 3 pivotal trial of Bria IMT plus a physician's choice in advanced metastatic breast cancer, and so that's another one that I'm going to be looking at. They've got a presentation that's going to be on October 12th, so it's going to be a significant presentation. And then the final one that I really like is Perspective Therapeutics, CATX, and they're starting to deal in areas of that are new within the medical space. It's basically radiopharmaceuticals. It's a radiopharmaceutical company. They're pioneering advanced treatments for cancer throughout the body, but they've got for treating cancer throughout the body, but they updated their drug 212 VMT, which is a program that's been accepted for presentation at ESMO. So it's going to be a stand-in in a plenary, and so it's going to give them a great opportunity to have the whole medical community at ESMO, looking at their therapy and the new treatment that they're going to be bringing into the
Very
into the
cool.
cancer space. So it's pretty awesome. So, and those are pretty much mid cap companies that are where the light's being shined on them, and big pharma will be watching.
Yeah, absolutely, absolutely. Well, we'll be staying tuned. We actually just launched our ESMO dashboard this past weekend on Biopharm Catalyst, so folks can tune into our website to take a look at when these catalysts are going to be presented. So just something for all the folks viewing or listening to know. You can get that information on biopharmcatalyst.com. So something that we're tracking. We usually do that with some of the bigger conferences: ASCO, ESMO, JPM, ASH, those conferences. So just want to let everybody
Extremely
know.
helpful as well. I looked on there. I had just seen that, and
Mm-hmm.
they were all lined up. So what I liked specifically is that if you put in ESMO 2025, it'll just pull up what's coming up in October. If you just
Yep.
put ESMO, then you might get earlier data, in earlier months, but it has a list of all the companies that are pertinent, so you don't
Yep.
have to go through each individual one. So that's great.
Yeah, absolutely. Appreciate it. And then finally, before we jump over to the watch list and your full catalyst list, um, I did want to just ask one question that had come from a user on YouTube who had commented. So just for folks who are who are listening or viewing, we do take a look at all the comments and the questions. So if you have anything that you want us to talk about or cover, we will likely, we'll try to get to it and try to ask Sheff his thoughts or his stance on whatever topic it is that you have, to the degree that we're able to. But one user was just asking in general about trading options. So this comes up a lot in biotech. Obviously, there's a lot of folks who will sometimes take a look at the options, either as just taking a look at the implied volatility, taking a look at that, the expiration dates of the options in line with the actual catalyst dates. Do you do any kind of options trading at all, or are you strictly just equities, or have you done options trading in the past? It's more just out of curiosity.
No, I've done options trading in the past, and especially on binary events, where it's either hit or miss.
Yeah.
But most of the time, I I prefer to do stock on
Yep.
those binary events because a lot of people that follow me don't understand options.
Yep.
And many times they have accounts that they're working with and they're looking at a specific catalyst date. They're not looking at an expiration date associated with the catalyst because
Right.
those
Right.
expiration dates can vary around the
Yep.
catalyst, where a specific catalyst date allows them to specifically trade, not knowing what the expiration date is on a specific and how many to buy at a certain time. So I do it personally, but when I'm sharing my strategy in terms of pharmaceutical trades, I basically stick with the stock, because people do well, they understand it, and there's more discussion around owning different stocks and being able to trade in and out of them versus what month of the options do I buy and what's the strike price, and it gets really complicated.
There's a lot of, yeah, and my comments on that it's very similar. There's a lot of variables there, right? With every, when you're talking about a stock, you're really talking about just the stock itself. Yes, you're going to have a price target, an entry price, an exit price, but when you're talking about options, you've got the price of the option itself, right? You've got the implied volatility, you've got different expirations, you've got whether it's a call or put option, you've got different strike prices, you know what I mean? So things
Yes.
it's definitely, and then obviously within that, there's different strategies you can use. So the permutations end up being pretty vast in terms of what you can discuss there. So I totally hear you on that, and that makes sense to me too.
Yeah. And the other thing too, thanks for those comments. When you're talking about tech catalysts and you're, working within a specific area, um, people have their own strategy, but it's a strategy that they understand because it's around trading around a catalyst and a certain price. And like you said, you don't have those additional variables that oftentimes can complicate a trade. Trades are complicated enough as they anyway, because there's a lot of mental that goes into, if you're up 80 cents or 30% on stock, do you take profit off the table? What do you
Yep.
do? But when you're dealing with expiration dates and options, it can even be more challenging. So I see it being easier to discuss a trade around, an equity trade versus an options trade.
Understood. That makes perfect sense. Thanks for answering
Yeah,
that.
thanks for that question too. I love getting questions like that. It's a great question.
Yeah, it is. It does come up a lot, and we do have a fair amount of people who are, at least they've heard about it, or they have an interest in the options market, and it's certainly the points you made are very well taken. So appreciate it. If you find the information that Sheff is presenting on this podcast useful and would like to gain more insights into his trading strategy for individual tickers, you can donate to this charity, the Northwest Association for Blind Athletes, and all individuals donating $300 or more get full access to his VIP private X account. Founded in 2007, the Northwest Association for Blind Athletes is a national leader dedicated to improving the quality of life for children, youth, and adults through participation in sports and physical activity in communities across Washington, Oregon, Idaho, and Montana. NWABA's programs focus on helping people who are blind build confidence, gain self-esteem, develop friendships, and reach their greatest potential. You can donate by clicking on the link at the bottom of our podcast page, www.biofarmcatalyst.com/podcast, or via the link in the YouTube video description. So let's jump over to the catalyst portion of the podcast and Sheff's watch list.
Absolutely. So, we're in September right now, mid-September. We just saw a catalyst, come through today. And, that catalyst was KAPA. KAPA had been trading around 110, 120. And obviously what they did, which was really helpful for investors, was they set a specific date that they were going to be sharing data, this phase 2 data in metastatic prostate cancer. So the stock hit a high of 220 plus last week. It pulled back this morning. They released data. It was 180, and it's pulled back since then. They're going to have data. They're going to be sharing the data in about 20 minutes. But it goes to the fact that a lot of times when these plays have a specific catalyst date, you can trade around them several times. I know people who have traded around this specific catalyst in this ENV 105 target for prostate cancer that they have, and for lung cancer. They've traded around that 3 or 4 times. So it could go higher, after they release data today in the next 20 minutes. Or not. But
Yeah.
that was at the tail end of September. So now as we go into further trades, we've got a stock, Rally Bio, ticker symbol RLYB. They're a company that addresses a broad range of complementary mediated diseases, which with the initial focus on a specific rare disease, immune platelet transfusion refractoriness. It's called antiphospholipid syndrome. They've got data readout for their cohort 1 phase 1 study. It's basically pharmacokinetic study in the 3rd quarter, so it should be by the end of September, and then they have cohort 2 in the 4th quarter. So they've got about 60 million in about 60 million in cash. It's actually 54.5 million in cash, no debt. And they're trading under cash at 60 cents right now. And so, again, I've spoken in the past on the fact that I love pharmacokinetic studies, because oftentimes those are studies that don't have specifically set, p-values that you have to hit for a small company, and it allows them to go on to phase 2. But there doesn't mean they're not important. It means that it allows them to go on to the next stage of the development, and oftentimes, they are able to cash in on milestone payments, as this company has made a living from cashing in on milestone payments. So I like I own that one, RLYB. I think in the next week or 2 we see data. So that's the first one. The other one is IMRN, which is Imuron. So Indian Mary Robert Nancy. They have an IND submission at the end of September. They're also going to have preclinical data that they're going to have before September, so at the end of the 3rd quarter. And then in the 4th quarter, they're going to have data on their drug for traveler's diarrhea, which is money that's been given to them by the by Health and Human Services, NIH. They've got a lot of government money that's behind this study. Stocks at 185. I think the data is going to be positive. I own that one as well. I really like it. So they've got 2 catalysts at the end of September and then 1 in mid-October. So that's Imuron. There's one called Ovid, OVID. They've got data at the end of 3rd quarter. It's like a pill in a box, and what I mean by that is they have phase 1 data that is going to be extremely important for the company. It's a next generation GABA AT inhibitor that's anticipated to read out, as I mentioned, at the end of 3Q. And they developed OV329 for the potential treatment of drug-resistant epilepsies, so in neurology space. And so we'll see what happens with that. I know that I've been talking about that. I talked about it the last 2 podcasts. And when I talked about it initially, it was at 53, 54 cents. Closed today at $1.20, so it's up over 100%. If they have positive phase 1 data, it's going to be a $3 stock because of the application for their OV329. So I like that one. I've owned it. I've peeled some back, obviously, because as I'd mentioned before, a lot of times with these catalysts, when you have a run up like that, you definitely want to take some off the table and don't want to get greedy, even
Yeah,
if you
totally.
decide to hold some later, right? Um, then ONCY, which is oncolytics, they have a strategy shift where they have PILA for late stage trial and metastatic pancreatic ductal carcinoma. And so they're working closely with the FDA right now because they have a regulatory update that they're going to be giving at the end of third quarter. And their hope is that they only have to have one pivotal study to get this drug for pancreatic cancer approved. And because the initial trial they had, the results were so positive that they think that they're going to have a shot with the FDA. So there'll be a regulatory update at the end of 3Q. That's pretty significant because it is in pancreatic cancer. I don't own that one. I'm just, following that one pretty closely.
Hmm.
Um, Synexis is an antibiotic company. They started dosing their phase one single ascending dose and multiple ascending dose study of SCY-247, and they're expecting to release phase one data in third quarter, so it should be here within the next few weeks. They've got a partnership with Glaxo Smith which obviously is big pharma. They've received several milestone payments in the past. I think with it being a phase one study and it being in the antibiotic space, which is a unmet need space, I see them, with it being phase one, um, it being successful. And so I own Synexis. I really like that company. I follow them in the past, and their studies have been successful. And having big pharma as a partner is significant for them. So that ticker symbol is SCYX, and that's going to be a big one. Probably the biggest one for September is going to be Larimar, which is Larry Robert, Mary Robert. Um, they have Nublabafoops, which is for Friedreich's ataxia. It's their OLE study, which is supposed to be updated probably here. It's probably going to be next week. Stocks at $3.90, around $4. But this OLE long term study data is going to look at their 50 milligram cohort and their adolescent pharmacokinetic data, and they have worked extremely close with the FDA. Last year, they had data that didn't pan out. They didn't provide the material that the FDA needed. And so the FDA, as John and I talked about with these rare disease companies, they've been able to follow this company closely. And so there was a report that just came out by Guggenheim where Guggenheim said that they spoke with someone closely within the FDA who said that Larimar has done everything that they've needed to do in terms of communication with the FDA to get this through so they can get accelerated approval, which is the goal for them. And again, it's in a rare space, Friedreich ataxia, which
Yeah.
there's nothing in that space. So that's one that's going to be in September. So the next one is Ganex. It's GainRx Therapeutics. It's ticker symbol GANX. Um, they have an analysis of their 90-day biomarker activity for cerebral spinal fluid and all their participants. It's tracking extremely early. They were not expected to get this phase one data, until the beginning of 2026 or the end of 2025. But that data is now expected at the earliest in November. And so it should be available in 4Q instead of first quarter of 2026. And they had screened all their patients through July 31st. And obviously, with that kind of early news, positive news, that they're tracking in a good space right now. So GANX, I don't own it, but it's one that I will be following here and probably grab some shares there in the next week or two, because they reached full enrollment early for their 1B study, also in Parkinson's disease, and so they're doing well. There's one that's near term, CLYM. They've got a, you know, a investor information meeting on their data. That's a webcast that's happening on September 29th. So they're going to share brand new preclinical data of their drug CLYM 116 and its potential to evolve in IgAN treatment. And so that's on September 29th. So that's a catalyst with a specific date. For those of you that like to trade around dates, there's a specific date for you to trade into, kind of like what I talked about with Kappa, where they have today is the date that they were going to be releasing information. And that's, again, in the next 10 minutes. But the
Yep.
stocks already had their run and everything. So I talked about Imuron because I'm shifting to October. They've got the
Yep.
traveler's diarrhea data in October. There is there's PEPG, um, Pepogen Pharma. It's they've got data on October 11th in myotonic dystrophy. I mean, type 1. And it's basically phase 1. It's a single ascending dose randomized placebo-controlled clinical trial. And it's not pharmacokinetic data, but it's single ascending dose data. So there's MAD data and SAD data. This SAD data, several analysts have said that, Guggenheim included, Maxim have said that they're expecting positive data. When this data is released on October 11th, it's going to be at a conference. And so, again, uh, it's data that you can trade around with a specific date. And oftentimes it's can be challenging getting those specific dates to trade around because companies like to say early Q3,
Yeah.
early Q4, late Q4, but when you have a date, you know when the date is going to be. And
Yeah.
so it's easier to trade around.
And that's why the conferences sometimes are very good because you can get specific, like, hey, the data is being presented on this specific date, as opposed to it just being like in Q4, right? If they're going to present it at a conference, it's going to be like, on it, obviously on a specific date at a specific presentation, even at a specific time. So
Definitely. Well, even like you said, knowing the date, sometimes those dates roll into the weekend, and it's
yeah.
easier sometimes to trade catalysts where it's on a weekday because
Hmm.
you can still trade up until, whereas on the weekend, once you're done
Yeah.
trading at 5 on
A
Friday,
Friday, yeah.
right, then and it's on Sunday, you're just hoping that it's positive leading into Monday.
Yeah.
So the next one is uh it's OS Therapeutics, which is OSTX. I've been talking about that one.
Yeah.
That one is the one with treating osteosarcoma in canines as well as individuals. They also have OST, a HER2 product in breast cancer. So they've got a October 10th meeting. It's a public meeting that they're having with the FDA. It's a public meeting with key osteosarcoma stakeholders. It's entitled Advancing Osteosarcoma Drug Development, and it's going to be connecting research and regulatory pathways for improved outcomes. So they're going to have additional data on their therapy, which they're seeking accelerated approval for. Again, they're hoping to have accelerated approval by the end of 2025, and they clearly have the FDA's attention on their therapies. So they've already received MHRA scientific advice. They've received ILAP requests for OST HER2 and prevention of recurrent pulmonary metastatic osteosarcoma. And then they secured in October 2025 the EMA, a meeting with the EMA, European Medical Association, for the scientific advice meeting. So there's a lot going on for them in October with the ultimate goal of getting approved at the end of 2025. Stocks at $2.20. And it's definitely an unmet need space. They've already got accelerated approval or what is it? Prior designation, priority review. Excuse me, that's what I meant to say.
Yeah.
Priority review. They've got a lot of stuff going on there. They've got they're osteosarcoma is a rare pediatric disease, so if they get approved, they'll get a priority review voucher, which obviously vouchers are going for between 150 and 200 million. And for a small company like this with a market cap at just over 50 million, that would be absolutely significant for them.
Hmm.
Um, yeah, I talked about Nucana, which is NCNA because they're going to be presenting at ESMO So that data is on October 19th, and I think that data is going to be positive, and I do own shares of that. Tailing off here in October, you've got company AEON, Aeon Biopharma. They have a meeting with the FDA in the fourth quarter. Their expected results and path forward from the biosimilar biological product development type 2A meeting. They're going to be presenting what happened at the meeting, and if the meeting highlights are positive, it's an 80-cent stock with an extremely low float. And most of the time, these meetings, what I've found are if the company is doing their due diligence in terms of follow up with the FDA, then when they have a meeting, there's not a lot of surprises. So as an investor, what I tend to look for in success of whether these regulatory updates, if you will be positive, is the kind of communication that they've been giving to investors. If all of a sudden you look up and you see that they're meeting with the FDA, but they haven't been prepping via press releases that they're meeting with the FDA, it's not one I would invest in typically. OSTX would be a different example. They've been prepping since April, and they've given updates to investors so investors aren't surprised when they do see positive results because the company's been guiding them on those results along the way. So just a tidbit in how I look at, hey Sheff, why would you invest in one that has a regulatory update and you think it's positive, and one that you might not think is positive but it's a lower price? Well, it's all in the communication with the investor that we've been able to see from prior PRs. There's a company, ACRV. ACRV is $1.30. They're followed by two analysts, followed by Oppenheimer and Ameritrade, which is, I forget which one they're owned now by. But ACRV, they're on track to for ACR 2316 data, which is in the second half of the year. We don't know when that's going to be. Obviously it's data dealing with a dual WEE1 inhibitor and PKM1 T inhibitor, but we don't know when the data is. So is that one I would trade? I don't think I would, just because I don't even know. It's just a second half. It doesn't say end of third quarter, early fourth quarter. And for a trader that's coming in and you don't want to have to sit there and worry about when the data is going to be released, you want to know. So, but that's one I wanted to put out there because it could end up being positive and it can skyrocket as well. So that's ACRV. Let's see. There's a PDUFA date that is expecting priority review on October 25th, and that is ticker symbol Sam Nancy David X-ray, and that's in relapsed to refractory acute myeloid leukemia. So that's one that I like and I'm going to be looking at. The reason being is because it's a supplemental NDA. So they've already have this drug, Refuforge, approved. It's just for, relapsed refractory NMP1 acute myeloid leukemia, so specific genetic type of myeloid leukemia that they're looking for their drug to be utilized with. So it's easier to get approved oftentimes when those drugs are already on the market because you're not going through a whole NDA process, but you're just supplementing it. So that's one that I'm going to own going into that. I don't own it now, but I will be watching for that. And then two more for October, and then I'll go over a couple in November, and that'll be an update. Adicet, which ACET, they're oncology focused. They're switching to their prostate program, and they're on track for data in the second half. It's an 80-cent stock. They've had successful clinical studies in the past, but again, we don't have a read on when that data will be. I know they talked about in the latter half of the second half of the year. That could be November, it could be December, but that's one to watch. There's a 40-cent stock that I like, a micro cap stock. It's called Reviva Pharma, ticker symbol Richard Victor Paul Harry. And they plan to meet with the FDA in October to discuss the potential for their NDA submission based on this, this package that they've put together, pretty robust package that includes a successful phase 2, phase 3 study from the Recover 1, a 1-year open label extension study. But two analysts have said that they have given price targets of $3 because as a 40-cent stock, this is a company that's worked closely with the FDA, and it's one that if they have a positive meeting with the FDA and the FDA lets them submit for approval based on a single study, that's going to obviously increase the value significantly. So that's Reviva Pharma. And then finally, for the 3 November plays that I really like, Eledon Pharma, they've got top line data from their phase 2 Bestow study, and tegoprubart, which is against the standard of care, tacrolimus, in kidney disease. So that their data is going to be presented at Kidney Week, the American Society of Nephrology, November 5th through the 9th. So all eyes are going to be on that phase 2 Bestow data for tegoprubart. And again, that's expected in November. It's the 5th through the 9th. So that American Society of Nephrology Kidney Week meeting, there's going to be a lot of companies presenting, but that company is who everyone's going to be watching. So I'll be watching Biopharm Catalyst as well to see if you guys are tracking, if those companies are being tracked within that meeting. That would be great.
Yep.
And then the final two, PRQR, which they have first in human trial of AX0810 that will evaluate safety, tolerability, pharmacokinetics. That data is expected in Q4. And I think it's going to be positive. There's a lot of big money in that one. I'm going to be owning that one into that pharmacokinetic phase 1 data. And then finally, there's a micro cap company that's around 20 cents right now. They're called Processa. They have a drug called NGC Cap. And basically what it is, it's a reformulation of capecitabine, which capecitabine is an oral medication used in the treatment of breast cancer. And so, hand-foot syndrome is literally 40 to 50% of all patients that take capecitabine. It's one of the limited side effects of a product that should be a multi-billion-dollar product, but it's not because patients can't stay on therapy. So Processa takes companies, or not companies, they take products that work well efficaciously, but they redesign them in the delivery so they don't have the hand foot. So they've shown as high as 6% compared to 50% for capecitabine. So with their cap 2, they're going to be, which they call it their revital or their reformulated capecitabine. They're actively enrolling phase 2 study patients in metastatic breast cancer, and they're going to have data around the San Antonio breast cancer meeting. So that will be around December. And again, it's 20 cents right now, 52-week lows, 15 cents. If anything, we could see a run into that just because it is small. A lot of times traders get a hold of stocks like this, and when you're dealing in the breast cancer space, it can move. So I don't own it right now. I'm assessing whether I just want to say one thing. I saw a filing come out where they authorize that if they need to do a reverse split, they can because the price is so low. I don't know if they're going to, but they did authorize them to be able to. So until I hear from the company whether they plan on you doing that reverse split, that's not a company that I'll be getting into
Yeah.
immediately. So that's pretty much
Awesome.
it. A lot of good stuff coming up in the fourth quarter. Hang on tight. I mean, this has been a great ride throughout the year, especially as we've watched and you talked about it, John, the IBB and the XBI do their things, even with some of the fluctuation in the economy and jobs and AI, and
Yeah.
we've
Yep.
still been able to rely on biotech to do what it's doing, and that's appreciation of solid gains.
Yeah, absolutely. And to your point, a lot of obviously you went through, as always, a tremendous amount of information and a lot of things to be excited about. As a lot of folks know, end of the year is always a really hot time. We've obviously got a couple conferences that we've mentioned and just a lot of good data coming in at the end of the year. And then obviously we'll have JP Morgan at the beginning of next year to kind of set the stage for 2026. So, Sheff, always great to have you on, man. I love it, and your insights are extremely valuable. And we always appreciate it. So thank you so much for being on and doing this with us every month.
Absolutely. This is great. And I appreciate the questions from listeners and investors, and it's always appreciated. And yeah, thanks for the forum. It's great.
Yeah, of course. And for anyone listening in or watching on YouTube, as I mentioned, we do take the comments and the questions seriously. So if you have any questions or comments that you want us to address, please feel free to comment on the YouTube video or send them to us directly. Please like the video, subscribe to the channel. We're really looking to grow this and get you guys as much information as possible. Also, as we always mention, Sheff is a big proponent of the Northwest Association for Blind Athletes charity. So if you find the information useful that he's talking about, and you want more insights into how to specifically trade a little bit more, you get access to his direct private Twitter feed if you donate $300 or more to the charity. So we have the link on our podcast site on biofarmcatalyst.com. So feel free to check that out. And as always, really appreciate you guys listening in and watching, and we will see you guys next time. Thanks.
Absolutely. Take care, everyone.